What's going on, everyone? We're going to cover Bitcoin today. Remember, I'm not a financial advisor. None of this is financial advice. But look at what we got here. We have 6.8% down in the last 7 days here. And it did exactly what I thought it would do. We're at 89.9K. We're hopping straight into it. So we had this sort of ascending triangle forming, and then we broke out of it. And I said, hey, even though we're breaking out of an ascending triangle, which is right here, as you can see, we can just take this off. We were still trading within a rising wedge. And a rising wedge can also be considered as a bear flag as well. It could also be considered as a bear flag. So rising wedge, bear flag, and then we're also in the process of creating a new pattern, which we'll be figuring that out today pretty much. So that's what we're going to be talking about. But yeah, that's pretty much what's happening right now with Bitcoin. Again, shout out to the new members. Shout out to the new members. Shout out to the current members. So yeah, we got a lot to cover today. So shout out to you guys. But yeah, as we can see, we are currently making our way back up, trying to retest these areas here. And also, I will be covering something that a member wanted me to talk about. Remember, guys, I only do requests for members. If you make a request and you're not a member, I'm not going to make a video on it because I'm kind of done with YouTube, but I'm only making YouTube videos because I have a bunch of members, only like 15 members, but I have members that are paying monthly, so I can't just not do videos. So I'm really only doing videos on Bitcoin when it's necessary, like now, and when members make requests. But if it's not a necessary video, I'm not doing altcoin videos and like that, stuff like that, unless a member makes a request. We'll be talking about Zcash in the next video. Wherever that one is. Oh yeah, there it is, Matt Roy. We're going to be talking about Zcash in the next video. But we're going to be talking about how I do my confirmation for my trades. How do I get confirmation? So it's more like a buzz term type of word, confirmation. So I'm going to explain that later on in the video. But let's talk about Bitcoin here. For the people with the short attention spans, they've already clicked off the video because I've gotten off topic talking about members of the channel. That's another reason why I don't want to do YouTube anymore. People just have short YouTube short YouTube shorts type of attention spans. You can call it TikTok brains. They got TikTok and attention spans. They can't really keep up. So you might see me drifting off every now and then because we all got TikTok brain at this point. So you might just see me talking about the members of the channel and then get back to talking about the technical analysis. This is very bad for the growth of the channel and for the growth of videos, and the channel will never grow. And this channel is stuck at getting 200 views per video because I don't really care to make the videos appealing. So that's why I don't do YouTube anymore, if you guys are wondering why I make less videos. But let's talk about the technicals here. So what I'm seeing right now is exactly what I mentioned before. And I want to kind of scroll out here and look at what we're doing because I kind of predicted that we would do sort of like a double bottom scenario. If we continue downwards, we go down to 80K. It looks like we're about to actually get rejected here. So I'm predicting that we're going to get to 80K pretty soon. Not only that, we've also started some bearish divergence again, right? We had bullish divergence here, and you can see the higher lows on the MACD. We had the bullish divergence, and let's pull up bullish divergence chart. Higher lows on the MACD, bullish divergence is the one over here to the right. So we had the bullish divergence, and that is what kind of caused the uptrend in the first place, right? That's what caused all of this mess. But now we barely had any type of bullish movement because we're currently in a bear market. So even though we had bullish divergence, it was the relief rally, right? And this isn't even the official relief rally, guys. Like, I'm saying relief rally, but I think we're going to have an even bigger push, right? But I think we're going to come down more, and this is going to like shake people out. I don't know. It's hard to tell whether or not we are going to be in a extended bear market. Things might actually be different this time. It's hard to tell if we're going to have a bear market for the whole year, right? So I'm not trying to predict the long term, right? I'm trying to predict near term stuff. So when you see these videos, I'm no longer going to talk about, I think it's going to get here in a year. I don't care. I don't care what it's going to do in a year. I really don't. Other people do because they do long-term trading, so you guys should watch their videos, but I do short-term stuff because I can predict the short-term stuff pretty well. And I just stick to what I'm good at. And I've noticed the long-term stuff is just too much for me. I can't I can't deal with it. So yeah, go somewhere else for that. But what we will talk about is what I think is forming now. So I think this is the start of the next downtrend. You can see we are starting to get more bearish here. And now you can see lower highs on the MACD. And now we're turning downwards here. So I think this is the start of bearish divergence, right? We had bullish divergence here, and now we're having bearish divergence. So I think this is going to actually pull us downwards. And this is an example of bearish divergence. You see on the MACD, your highs are becoming lower. And then you also see the price simultaneously increasing before it finally hits the final area of the bearish divergence and it starts to actually trend downwards. And that's what we're seeing now. It was trending upwards, and now we're going to start trending downwards. So I think we're getting rejected here at 90K actively as we speak now. And then the double bottom scenario. Double bottoms are actually bullish patterns. So that's why I'm not trying to predict the bottom, and I'm not trying to predict the top. I'm only focused on the direction that we're going. Is it possible it could be a double bottom? Yes, this is possible, but it doesn't mean it's going to happen. A double bottom would look like boom, 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 boom. But what if we had one less boom in there, right? What if we had one less boom? What if we came down here and then we had a bull trap? Like, we think it's going to be a double bottom, but then it continues downward just a little bit more to like 74K. And this was my original theory before I started to think about the double bottom theory. Because down here at 74K, that was the lows of that previous run up that we had when we had that falling wedge right here. That falling wedge. And you can also call it the bull flag. So that was the lows of there, which was 74K. And that was the highs of that previous run up. The highs of the previous run up was also 74K. So if we don't do the double bottom scenario and we go down a little bit more, then we go down to 74K. So there's a possibility that we go down to 74K on the next pullback. Also, what was the highs of the last bull market? Same thing. Well, kind of the same thing. It was 69K, which is close enough to 74K for it to be less than a coincidence. So, or more than a coincidence. I don't know. I don't even know how I would say that phrase. So, but yeah, what we would see there would be a pullback to 74K. So if the double bottom scenario breaks and we hit 74K, I think we hit 74K and then we have a massive relief rally, right? So we either do a double bottom and then a massive relief rally, or we do 74K and then a massive relief rally. I think 74K is more likely. And let's say it hits 74K and continues downwards. Don't be scared because we still have 69K. What was 69K? 69K was the deal breaker after that last rally, right? It was trending around 69K, and then after it broke it, it was good, right? It hit 74K up here, yes, but then it had to go sideways and go through this bull flag eventually so it could reach that 69K range and then break out from it again. So 69K is very important. And then also when you look back here, again, 2021, the highs of 2021 was 69K. So what am I saying? We are either pulling back to 80K, rising up from there and doing a double bottom. And let me do the example so you guys can see. We either pull back to 80K, rise from there, do the double bottom, and then, still get rejected at the levels that I believe we'll get rejected at, which is like 108K, 200-day SMA, all that good stuff. Or we come down to 74K, then have the relief rally back up and then get rejected. Or we go all the way down to 69K, then have a relief rally. If we go all the way down to 69K, that's going to be really bad because then we're going to continue down, probably down to 50K. And that would be really bad. And we're already seeing Trump is applying new tariffs on everybody, right? Last time that happened in April, everything dumps. Everything went bad, right? Last time that happened in April. Let's go all the way back to April of last year. And so, yeah, I'm probably going to have to do this. And then we can just scroll it all the way out here. So, yeah, as you can see, when it happened in April, we went all the way down to 76K. We went there from 104K down to 76K. So if that were to happen again, I would predict that we would go much lower. So we'll have to see if that is the case. But yeah, we'll see if that's the case. But until then, we'll just keep watching stuff. We have 32 on the fear greed index. We're getting more fear back into the market for obvious reasons. Percent R trend exhaustion now trending downwards. Remember, when the short-term trend, which is the white line, breaks far past the long-term trend, which is the blue line, I always say this, we know we're coming in for a pullback. So yes. And when you guys are trading, this is less of a technical analysis, or it is technical analysis, but when you guys are trading, don't focus solely on your indicators. Your indicators, all right, let's say this. If we're driving a car, right, and this is me making an analogy on the fly here. I don't script my videos and making an analogy on the fly. So if you hear me pausing, that's literally me thinking in real time. And that's how you can tell true intelligence. But anyways, let's move on from that. So let's do a scenario like this. We're driving a car, right? You have your indicators, and then you just have your price action on the charts, right? And what I mean by price action, it's literally the psychology of trading. Like you just know things after some point. Like after you're trading for so long, you just know things, right? You just realize things. Fibonacci's are not indicators. Fibonacci's help track price action. Fibonacci's are not indicators, right? They're just little drawings that you can do on the map here on the side or on the chart. And then you have these trend line tools. I always use the horizontal lines. These little white lines, horizontal lines. I place them there as micro support and micro resistance lines. These little white lines, the horizontal lines that I put on the side, you can do it here. Boom, horizontal lines. You can place them anywhere. These are micro support, micro resistance lines. These are areas where we stop and start in. And remember what I said in the beginning of the video. I'm going to be drifting back and forth between speaking on what members are asking and, doing different technical analysis theories and showing people different things, right? So this is why my videos stay at 200 views, because, some people can't follow along with it, and that's completely fine. I don't really care. But for the people that can follow along and for the members, that's who I'm helping. So these micro support and micro resistance lines, these are just little areas that we stop along the way upwards, right? These are little crossroads as we're driving in our car. Remember the scenario I'm talking about. These are little crossroads as we're driving in the car, right? So we come to a stop sign. We're at a four-way stop. We have these different areas. We can go left, we can go right, we can go straight, we can go back, right? And that's what the micro supports and resistance are. But the Fibonacci's are the macro supports and macro resistance lines. These are your stoplights. These are your stoplights. These are the areas you need to stop. You need to wait. You need to be like, hold up, something's about to happen. Something was about to happen here, and it pulled back. Something was about to happen here, and it pulled back. And then it finally got up to a micro support all the way up here. Now I could establish a micro support there or a micro resistance, but I didn't do it because I wasn't actively trading at that point, right? I don't know what I was doing that day, but I wasn't actively trading. If you look up here at 97.9K, why is it a micro resistance? If you look back here, where did it stop at before? Micro resistance. We mark it right here at the top of that candlestick wick. Where did we also, and I didn't even know this. Like this is what I'm saying when you're a trader and you're good at technical analysis, you just notice things. And as I'm making the video on the fly, I just noticed this and I speak on it as I notice it. Micro support, micro resistance. These are micro resistance lines. These are just little areas that it doesn't have to stop at, but if it does stop at these areas, then you know that something that you can have an opportunity in a trade, right? So now I'm dialing it all back. Remember, I'm all over the place, right? I literally have like a map in my brain. I can go back and forth, dialing it back to what I was speaking on before about the scenarios with the car, right? Your indicators, these are like your blinkers. These are telling you whether you want to go left or right at the intersection, the four-way intersection. They're also telling you whether you should go left or right at your stoplights, which are your macro resistance and macro supports, which are your Fibonacci's. Your micros is like your four-way intersections at your stop signs. Your micros, those are really for small intraday trading and stuff like that. But your indicators, you're not driving your car the whole time focused on, hey, I should turn on my right turn signal. No, your right turn signal, that's to guide the drivers behind you and everyone around you, showing, hey, I'm going right, don't crash into me. For example, hey, I'm about to make this trade. Let's make sure I don't crash and die on this trade because someone's about to wreck me, right? The chart is about to wreck you. Don't get wrecked by the chart. You wreck the chart. Don't let the chart wreck you. You wreck the chart. And like I said, I'm making this analogy on the fly. So you are going to be the one to wreck the chart, and you want to control what you're doing on your charts. And this is specifically for the person, Biblia, I think is Biblia, but shout out to you anyways, saying, what do you do for your confirmation? So your confirmation when you're trading is all based on your psychology and what works for you. It's different for everybody, but it's kind of the same, but it's different for everybody. Everyone has a different confirmation. So for instance, if I were to, because right now stock market's open, and perfect example, I predicted this, watched my previous video, the last video I made. I was like, look guys, we're in a rising wedge. We're about to break down. It's going to be ugly. Long and behold, we get Trump talking about a new tariff on all of Europe, right? A new tariff comes in as we're in a rising wedge. Look, these politicians, the rich people, they have people that watch these charts. They know when these things are happening. They know that the charts are ready to dump. They know that the stocks are ready to dump. They know it. They put this information out. Like they literally put this information out knowing it's going to crash the market, but they don't do it intentionally to crash the market. They just do it. They do it. But they know the market's going to crash because the market is ready to crash. The market is waiting for something bad. And in this world that we live in, something bad's always going to happen. So that's why we've seen that drop here, because we were in that rising wedge and because the bad news pushed it. The bad news pushed it to go ahead and do that. So as you can see, we broke down from the rising wedge. Anyone that did puts when I was talking about this the other day, you are winning. You are winning. Yeah, watch this video that I did. This is urgent. Bitcoin major market shifts are coming. Bitcoin SPY, BTC SPY. I told everybody like this, you are being warned. This thing is about to dump, and it dumps. So, you know, that's why I only make videos when it's necessary. That was a necessary video. That was a very necessary video. So anyone who put in some puts or shorts, you guys did very good. But yeah, that's just a little bit of that. But let's talk about confirmation. What was my confirmation for this? The confirmation for this was not necessarily that we broke out of the structure. Because when we break out of the structure, we can easily go right back into the structure. I personally like to see it go multiple percentages below the structure, not just a little bit below the structure, right? Because when we went below the structure here, in the bearish structure, which is the rising wedge, bearish structure, rising wedge, all the way down here at the bottom right, that is the bearish structure there. There was no confirmation on this first pullback because we only went to the first micro support. The first micro support was only 0.45% down. But after that, we came all the way back in here and broke out the structure again. When I see multiple percentages down below the structure, that's my confirmation. Everyone has a different way of doing confirmation. Some people, their confirmation would have been met here and they would have just held and waited. But I don't like doing that because I like to win on most of my trades. But you know, everyone's different. And then also confirmation indicators. Your indicators are your turn signals. When you start to see the %R trend exhaustion going from overbought down to these not oversold levels, but down to the lower levels. And look, we're on the 1 hour chart. You got to look at the lower time frames when you're trading. But yeah, when you're looking at that and you see that we're now leaving the overbought area, that is a signal that we are about to sell off, right? That's your turn signal. It's telling you got to turn now or else you're going to get wrecked because you're going to keep going through the intersection and you're supposed to turn right, right? And then you're going to get wrecked. Also, what is this? We have something else forming up right here. Boom. Lows getting lower. Boom, boom. What is this? Bearish divergence. Yeah, bearish divergence. So, you know, it is what it is, But let's go ahead and move on from this one. Let's go ahead and move on from this. So that's pretty much how I do my confirmation. It has to go multiple levels below the structure for me. If it just goes a little bit below the structure, it's not confirmed for me. What's confirmed for me is like this here. Like, I don't care about making the money from here down to here. I care about making, money like this. Like, once it breaks this level here at 680, now all I want to do is make this. I want to make that right there. And it's a small percentage, but I trade options that are about to expire. So it's a small percentage for some, but that right there for me is like it's like a 20% move on the option contracts I'm trading. So I don't need much. I just need that little bit right there. Even this right here, that big red candlestick that's currently selling off right now, this is going to continue downwards to about 673. At the end of this trading day, it should get down to about 673, possibly. So we should see that pulling back a little bit more. And then even more so, if you pull all the way back here, let's go to the weekly chart again. All right. And let's take off all drawings, if I remember how to do this correctly, all the way down here. All right. Yeah, it's not working for me right now. I don't know what's going on. All right, there it is. So yeah, this support right here, micro support, that is what we're looking at. 652 on the SPY. And that's what I'm looking for right now. So I think it should eventually pull back down to 652 on the SPY. So that's just me showing that. But yeah, for everyone who wants to see some Bitcoin stuff, let's go back to Bitcoin. We're at 88K in Bitcoin, currently going down. We're on the weekly chart here. This is the %R trend exhaustion. We're going to see this continue to trend downwards. We're going to get an even larger sell-off here. We're at 88K now, 88.3K, actively selling off as we're making the video. And then we're getting a lot of selling pressure on the weekly chart. Look at this. Boom, boom, lower highs right here. What happens when we have lower highs on the MACD? Bearish divergence. That's a bearish pattern right there. So it's all about pattern recognition. It's all about pattern recognition. That's all this is. And then eventually we'll start building bullish divergence right here. Right? Eventually we'll start building bullish divergence, which is going to be the higher lows on the MACD, right? Which will look like this. This here, this here, this here. But we actually might see this go even further downwards here on the weekly chart before bullish divergence starts to build. So yeah, get ready for that. Let's get to, I know I said I wasn't going to look at the longer time frames, but look, we're still building more selling pressure here on the monthly chart. So still pretty bearish in my opinion. I think 69K is very likely. 69K is very, very likely at this point. Just looking at how things are looking here, 69K is very likely. So I would say that is what people should be looking at and focusing on at this point as it pertains to the pullback that we're having. So yeah, I think we're going to continue to pull back here down to 80K. If we don't break out and continue our uptrend from 80K, then we'll hit 74K. If we don't from there, then we'll hit 69K. Then we'll try to have a recovery. So yeah, that's pretty much all I got for this. Definitely hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. Leave a comment in the comment section, all that good stuff. Let me know what you guys think about this. Shout out to the members of the channel. And again, we're going to be doing a Zcash video next. So that's going to be the next video that comes out. But yeah, prepare for 80K coming pretty soon. All right. Will it come 100%? I don't know. It may or may not. That's why I say I'm not a financial advisor. None of this is financial advice. But yeah, I think it's likely that we go down to 80K and then further down. But yeah, this is all I got. As always, I'll be back with another video.